The coinsurance clause or loss settlement clause. The majority of property losses are not total losses. Therefore, the insured may not feel it is necessary to insure their property for the full replacement cost value. To encourage the insured to carry an amount of insurance close to the value of the property being insured, the insurance company will provide a lower premium if the insured carries a limit equal to a percentage of the full replacement cost value of their home. This is usually 80%. This is in order to receive the full amount of the loss when a partial loss occurs. If the insured does not buy enough coverage for the property as stipulated in the coinsurance clause, they will be penalized and share in a portion of the partial loss. To settle a partial loss, the insurance company will compare the policy limit to the minimum limit required by the coinsurance clause using the following formula: the amount of insurance carried divided by the amount of insurance required times the loss amount less any deductible. For example, a building with a full replacement cost of $500,000 is insured for $300,000 with a $1,000 deductible. The policy has an 80% coinsurance requirement and a fire occurs, causing $120,000 in damages. How much of the loss will the policy pay after applying the deductible? Step 1. Determine if the building was insured for at least 80% of its replacement costs per the coinsurance requirement by multiplying 0.80 times the full replacement cost of $500,000, which equals $400,000. Step 2, since the building was not insured for 80% or $400,000 and was only insured for $300,000, the coinsurance requirement was not met. Therefore, the insurance company will not be able to pay the full amount of the loss, and we must use the formula to calculate the amount that will be paid by the insurance company. So using the formula to calculate how much of the loss the insurance company will pay, we must divide $300,000, the amount of insurance had, by $400,000, which was the required amount, times the loss amount of $120,000. This equals $90,000. After deduction for the $1,000 deductible, the insurance company will have paid $89,000. If the insured had met the coinsurance requirement and insured their property for 80% or $400,000, the insured would have met the coinsurance requirement and they would have paid $120,000 less the $1,000 deductible for an amount of $119,000.